The Dow closed up for the fourth consecutive day, its longest winning streak in almost a month, while the S&P tech sector closed at a record today. Tom Lee, head of research at Fundstrat Global Advisors, is now joining us. He contributes to CNBC as well. Well, Tom, happy holidays to you. I appreciate you being here. I noticed in the producer's comments that you think animal spirits will return next year, so I would want to ask you a question regarding that. This year, which animal species returned, and were they hibernating? Which species do you believe will be, in full force in 2025? We saw certain species out in full force in 2024. What I mean by animal spirits, and this is a reference to Milton Friedman, is that businesses have been cautious because the ISM has been below 50 for nearly 3 years. They haven't been very visible. Finally, though, the Fed is making cuts, and the new administration is thought to be very business-friendly. Therefore, I believe that businesses will be expanding and feel comfortable merging for the first time in a long time. This, in my opinion, is a very favorable environment for financials, small and mid-cap stocks, and cyclicals in general, such as industrials. Therefore, even though technology is keeping up with the industry, I believe that in 2025, the market will feel like it is expanding. Although I am aware that you are a classic optimist, Tom, I would like to hear where you believe the biggest threats to that prediction for the upcoming year lie. The main question in 2025 will be whether or if there is a policy error, and there are two possible reasons for this. One would be the implementation of economic damaging tariffs by the incoming government, as we know that these would have immediate impacts, or mass deportations that have an unidentified effect on labor markets. The other possibility is that the Fed might shift its focus from attempting to boost the economy to trying to salvage it if it gets overly focused on inflation and lets the labor market deteriorate. That, in my opinion, would be a really negative development. Tom, considering the focus of the incoming Trump administration, one of the major themes we merely wanted to draw attention to for the benefit of viewers and listeners was the notion that cryptocurrencies will continue to be a topic of discussion. We know you're optimistic about a lot of things related to cryptocurrency, but I was wondering if you could tell us which areas of the market you think would experience the best relative performance in 2025. For the past 8.5 years, investors have been advised by our firm to allocate funds to cryptocurrency, such as Bitcoin or Bitcoin and Ethereum. Since the regulatory environment is really getting more benevolent, that allocation should likely be significantly higher in 2025. Bitcoin, in my opinion, still needs to be the main component of someone's ownership. And I think that next year, Bitcoin will reach about $250,000. However, that would enable Ethereum, which is currently trading at about $3,500, to, probably do even better. You believe that Ethereum might reach $5,000 or $6,000 in the upcoming year. In addition, I believe that this year will likely be the alt season, when altcoins like Solana perform exceptionally well. Tom, if you believe that Bitcoin is a commodity and that some of the businesses that use those commodities may also be involved, similar to gold and gold miners, what kinds of businesses would stand to gain the most from that cryptocurrency expansion if it were to hypothetically occur? Well, we have learned things from 2024. When examining the top-performing stocks associated with Bitcoin, we find that those who are either buying Bitcoin as a treasury asset or are leveraged to the price have performed exceptionally well. These are known as leverage stories to Bitcoin, and those would be Coinbase, Silvergate Capital, MicroStrategy, and others. Additionally, there are other businesses, such as nvda, that are essentially following what Michael Saylor would refer to as the Bitcoin standard. However, if investors are particularly interested in large-cap stocks, I would say that a company like MicroStrategy provides excellent exposure to Bitcoin. What is the outlook for these stocks in 2025? Asked Doug Clinton of Deepwater Asset Management and Intelligent Alpha. Welcome back. Man, it's nice to see you. Scott, you too. Happy Christmas. So thank you, and Merry Christmas to you too. We did hint at the possibility that Nvidia might not be the top stock on the list next year. You simply believe that others might have their moment, not that you dislike it. Yes, I do. In my opinion, Scott, the hyperscalers' billion-dollar capital expenditures to develop truly general-purpose AI computing were the main focus of the last 2 years' A trade. As a result, they spent money on Nvidia's best chips to train the AI models they were creating. As 2025 approaches, I believe the focus will change to bespoke silicon, and the reason for that is that I believe these businesses will begin to utilize many of the specialized chips they have been developing now that they have essentially completed their general-purpose architecture. Therefore, I believe that next year we'll see a more aggressive deployment of the bespoke silicon that each of these companies has been building, including Google with TPUs, Microsoft, Meta, and Amazon with Trainium. In the end, that implies that it benefits suppliers like Broadcom, who serve the majority of those businesses, and it might benefit businesses like Marvell, whose stock we also own at Intelligent Alpha. However, what now occurs when Nvidia falls short of the remarkably high standards? People frequently draw comparisons between the AI and .com industries, and I believe that these comparisons can occasionally be helpful. And if you go back to the .com period, Cisco was, I believe, the archetype in this instance. Today, Nvidia is our poster child, and I believe it serves as a general indicator of how people view the industry. Therefore, I believe that sometime in the upcoming year, and to reiterate, Nvidia remains one of our top holdings. You might see Nvidia falter a little bit, and some of these other firms, like Marvell or Broadcom, might gain a little more traction. Hey, the AI trade's over, Nvidia's done, and therefore it can't keep going. Maybe the sentiment at that point. However, I believe it would be a mistake because Nvidia is not the only company involved in the AI sector. Many others are as well. Additionally, I believe that as it develops further, we will see more businesses operate similarly to how Nvidia did in recent years. Do higher interest rates harm the growth trade, or do they simply encourage investors to return to the market's largest equities as they are now? It may force investors to return to the largest stocks, but I also believe it will drive them to some of the AI companies with the greatest room for expansion. Again, if you go back to that time period, interest rates were between 5% and 7% for the majority of the 1990s. The 10-year is between 5% to 7%, which is well within our current range, in fact, slightly higher. Therefore, there is no law stating that low interest rates are necessary for widespread technical innovation. However, I believe that if you examine which businesses are able to maintain or raise rates above what we've seen in the past few years, tell me if you require any other adjustments. Yes, you are correct. After a year, this nvda has gained widespread recognition. But I believe that many people are still unaware of what the firm works. I contend that many investors are still unaware of Nvidia's capabilities. It is a highly complex business that is developing at a rate that few of its rivals are matching. Of course, that also applies to the people at Intel. What caught my attention about this Vanda data as well? Brad, really two things. JP Morgan and AT&T are among the top 20 companies owned by regular investors. Now, we've talked a lot with CEO John Stankey and featured AT&T here all year. As it has recovered, AT&T has been one of the most impressive companies this year. Naturally, JP Morgan is still doing well. Additionally, this